Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, November 3rd DT Reports video YouTube update. We do an update, a brief update every Saturday for our YouTube subscribers. So be sure and subscribe and turn your notification on so that you'll get an alert each time we do one of these video updates. And what we do is we spend about 10 minutes looking at a couple of markets that are in a technical position for an immediate trade the beginning of the following week. So let's start off with the stock indexes. They're unfolding almost exactly perfectly as planned, as foreseen, and let's see what's going to probably take place over the next few days. We'll start from the little bit longer term trend, the weekly. The weekly significantly this past week made what we call a dual look back momentum weekly bull reversal, and that usually is followed by at least 3 to 5 weeks in this case, bullish direction. Regardless of what time period you're looking at, if it were a daily or a 240 minute, it'd be 3 to 5 bars after a bullish reversal is made. And it was made on an almost textbook 5-wave decline in Elliott wave terms, but that should not be the completion of a corrective decline. It should only be the first section, what we call a wave 1 or A, and typically over the next 3 to 5 weeks, we'd have a wave 2 or B correction before we continued the bear trend. Well, that's number one, very significant that we're looking at. Here's our daily data, and the daily Friday made this outside bearish reversal day, and that's usually a pretty strong reversal signal from just below the 50% retracement, and that's usually the minimum retracement we look at against a 5-wave decline. But given that the 38% time retracement isn't until November 9th, till the end of this next week, is that this should also not be the completion of a corrective rally. It would typically continue at least to the 9th, if not later. And of course, the weekly bullish momentum, bull reversal momentum, or the weekly momentum indicates, again, at least another usually 3 to 5 weeks. So this should be a temporary high. The daily momentum's reached dual look back overbought. That's when the 8 momentum is overbought, similar to these past daily highs, which were followed by in this case, a couple of weeks, each of them, decline. And the reason we call it dual look back is the 13 reached overbought on Friday. So beginning next week, this area is going to be red, and that represents dual look back overbought, just like back at this daily low a couple months ago or a few weeks ago, it was dual look back oversold. So we've probably completed a daily high, and we have more evidence of that as well. So let's go. I'm going to go down to the 60-minute data. This is the 60-minute data coming up off of the October 29th low and into Friday's outside reversal day high. And as I had in our report update on Thursday, is more than likely the S&P was completing what we call a wave 4 correction, and it would make a new high and then complete the initial advance off the October 29th low. And this was textbook Elliott wave stuff, a 1 and a 2, and then this is a 3, and this is some sort of correction. And then again, we made a new high. We made it a little above the end of wave 5 price target zone, which is the 127 to 162% external retracements of the range of the widest range of the wave 4. So our minimum target was about 2748, or excuse me, 2746, and up to about 2757.58. Poked above that on Friday and then came down to close our trade below the wave 4 low, signifying that this 5-wave advance was complete. So a couple good things that we're aware of before the fact was, number one, as of Thursday, we're probably in the final minor section of the advance off the October 29th low, and when it was complete, we'd be several days sideways to down in a correction against this 5-wave advance. And of course, this is all Friday activity right here, so we should have typically, because the daily momentums were also dual look back overbought, we made the outside down day, we would typically then be 3 to 5 days sideways to down in a corrective wave 2. So the only warning I want to give against that, because this is what we'd call a perfect technical setup to be looking at short trades for at least the next 2 or 3 days, although the downside may be relatively limited because a typical retracement just reaches the 50 to 62% retracement zone at a maximum of 78.6%. The warning is, as you all know, this coming Tuesday is a very significant news event, the midterm elections in the U.S., and when there's a scheduled news event where emotions are running high and it's really difficult. I don't even try to anticipate what the reaction is going to be to an event like that. Is even though we're technically in a perfect position to consider short trades, boy, I'd be very wary of that because there's likely to be a lot of volatility, plus or minus a day of this next Tuesday. So what I would recommend you wait for is till after Tuesday, and we'll look at the shape of this decline and the extent of this decline, knowing in advance that at least technically we're probably making a corrective decline. And if that's the case, what's significant about that? Well, what follows a correction? And that's another swing up, typically to a new high. In other words, we'll just call this an A. We're going to be making a wave B low over the next couple, 3 days. And if it continues as the weekly momentum suggests and the 5-wave advance suggests, it all suggests that we're going to continue this bull run for another couple or 3 weeks. What would void that? So that's the first thing you got to ask yourself. What would void that? Well, certainly a trade below the 78.6% retracement. That's usually the extreme of a correction against a 5-wave advance, and it happens to be right around this congestion period. So that would be the extreme downside if the higher time frame trend is bullish as anticipated. So I don't suggest a specific trade strategy until after Tuesday. But what we can be aware of is that if this market continues to unfold as anticipated, we would be making a corrective low sometime by the middle of next week. And that would be the ideal setup to continue the bullish trend to a new high. So there would be a lot of potential upside well above last Friday's high following a corrective decline. Again, that's voided if we trade below the 78.6% retracement. So that would be, we'll call that the stop out point for the trade strategy. So that's what you ought to be aware of for the stock indexes next week. So the other market I'm looking closely at next week is the euro. And even if you don't trade the euro, or if you don't trade the ES for that matter, I try to make these trade strategy videos educational as well, so what you learn you can use for other markets and other time places. But boy, the euro is potentially in a fantastic setup here. Last week, this is the euro weekly, last week was the target week to complete a weekly low, and that was the week ending November 2nd. And why? Well, I've got 2 of the key time factors on this chart. One is the 100% alternate time projection of the last decline from the most recent high. These were both 5-week declines, and last week was week number 5. It's also that same week, and this is what makes it really compelling, it was the low to low to low. So those both fell on the same week. And interestingly, these were 11 weeks low to low, the last 2. And as you'll see in a minute on the daily chart, 11 might be fairly significant at least. And last week, we also reached dual look back oversold in the weekly momentum. That means the 8 momentum was oversold, had been for a couple of weeks, and the 13 fast line, that's the red line, reached oversold. So that's dual look back oversold, and that warns that a weekly low is near. It's not complete until we make a bull reversal on the weekly momentum, but given that this was the second, might have even been the 3rd week of the 8 being oversold, we're near the extreme of when we complete a weekly low. So that's significant. And here's the daily data. On the daily data, last Thursday and Friday were the two key daily time factors to complete a low. And that is the 100% alternate time projection of this 11 trading day decline from the recent high on October 16th. 11 days down was on the 31st. And I think I said Thursday, Friday. It would have been Wednesday and Thursday were the 2 days that were ideal to complete a daily low, which should correspond or coincide with a weekly low. And this is also the low to low to low is November 1st. So that was the specific date that we're looking at the weekly chart. So key time to complete a low, and on Thursday we made a dual look back daily momentum bull reversal. So when you make a dual look back daily momentum bull reversal and your weekly momentums are in the second or third week of being oversold, usually that daily momentum bull reversal coincides with a weekly, higher time frame weekly. Let's take a quick look at the intraday data. And again, it looks very compelling. Looks a lot actually like the S&P hourly chart, doesn't it? This is the 60-minute data coming off the October 31st low. And again, it made an almost ideal 5-wave advance. And because this is probably a weekly low, and we just look at that as a wave 1, and over the next 2 to 3 days or so, we should have a corrective decline. And we've already reached in the euro the 50% retracement. The ideal time for that correction would be just this Monday. That's the 38 to 62% time retracement of this 5-wave advance. And given that the weekly momentum has been oversold 2 or 3 bars, that the daily momentum already made a bull reversal, we're probably going to complete a corrective decline on Monday. Certainly Tuesday at the latest, if indeed the higher time frame trend is bullish. And given that we've already reached the 50% retracement, that means Monday during active trading, we're in an immediate position to consider long trade strategies. Why would we want to do that? Our daily momentum's just turned bullish. We're only 2 days off of this potential weekly low. So if we get that set up to go long on Monday, not only is it likely to be the euro net bullish over the immediate following 2 or 3 days, maybe even longer, but in the long term, potentially several weeks bullish. And so that makes it a great setup whether you're doing highly leveraged futures trades or if you're doing like ETFs, long ETFs that mimic the euro. Well, that's it for today. Hope you have a fantastic week. It's going to be an exciting week this week with the elections coming up in the U.S. There's probably going to be a lot of volatility. So trade lightly, as we say, small positions, regardless of how sure you are the technical position is, because there's likely to be some volatility the first few days of next week. Subscribe to us. Get the notification sent so you know when our next trade strategy video comes up. And for sure, I'll be back with you by next Saturday. Take care.